Hey everyone, welcome back to the channel, your number one source for income-oriented investing. Time to go over the high yield covered call ETF landscape on the US market. So this is for my American friends and for my Canadian friends, of course, who invest in the RRSP or Lira, or put these high yield funds in their RRSP or Lira, because there is no 15% withholding tax. So as usual, let's take a quick look at what the markets, Bitcoin and gold, has been doing in the last month. And then we'll go over all the ETFs that I feel are the top ones to consider, and we separated in different categories. So if you're new to the channel, welcome. My name is Adrian, and in this monthly series, I don't know what episode we're at, but I think it's almost 60 or 65 or something like that. But in this monthly series, and I have one episode for the US market, one episode for the Canadian stock market, I'm basically trying to keep you informed of what's going on in the high yield covered call ETF landscape. We're doing total return comparisons. I'm informing you of all the best ones out there that I feel are good for your portfolio. Of course, which ones you choose is up to you, but we're separating in categories like big cap diversified US, S&P 500, S&P 500 zero DTE, NASDAQ 100 Classic, NASDAQ 100 Zero DT, etc., etc. So of course, I cannot cover all of them. It's impossible. There's just so many. But this is really to keep you informed of the landscape. So what has the market been doing in the last month? Well, it's been going up, of course. What else is new, right? So last month, S&P here, up about 2%. NASDAQ a little bit less at 1.2%. Bitcoin a little bit down the last month. Good opportunity to buy some. Gold is just going up and up and up. So that's what the markets have been doing. There should be a Fed rate cut this month. We'll see what happens, which should make everything go up. But of course, when you expect something, or when the market expects something, sometimes it just doesn't happen, or the opposite happens, right? That's just how the stock market is. Luckily, we're buy and hold investors. We invest in quality assets, get paid every month or more often, and just write it out, of course, forever. So before we continue, I'd like to take a moment to thank today's sponsor, Vista Shares ETFs, which have recently launched a brand new ETF in their income-oriented Target 15 ETF series. The latest one that just came out is ACKY, so ACKY. That is the ETF stock symbol, and it follows billionaire investor Bill Ackman's investment. So if you want to invest like Bill Ackman, you're an income-oriented investor, this is a very good ETF to consider for your portfolio. As you could see, it invests in companies that the billionaire investor invests in heavily, or his company rather, invests in heavily. So it's pretty similar, very similar to the OMAH ETF from Vista Shares, which follows Berkshire Hathaway or Warren Buffett's investments. So this is the latest one. So if you're income-oriented investor that is looking for approximately 15% annual distribution rate, and you're a fan of Bill Ackman, or you want to invest like he does, this ETF ACKY is definitely one to consider for your portfolio. Make sure to check out all the details on vistashares.com. This is the third one in their Target 15 lineup. You have OMAH, you have now ACKY, and you also have QUSA, which focuses on quality US stocks. Let's start, everyone, with the big cap. So these ones don't fall exactly in an S&P 500 or NASDAQ 100. They're not exactly the indexes, but of course we're going to cover them. And in case you didn't know, I'm doing a maximum of 5 for each category, the ones I feel are the top 5. So for this category, we have 4. We have, of course, JEPI, who's still the most popular cover call ETF in the world. You'll always get that 7 to 9% yield. Right now, it's sitting at about 7. Volatility is pretty low. The VIX is pretty low. Latest distribution at 36. It actually passed 41 billion in AUM, by the way. You have Bali, which is BlackRock's response, or iShares' response to JEPI. Same management fee, same style, right? These are ETFs that are stock picking within the S&P 500, if you will, and writing covered calls. The yield's about the same for Bali versus JEPI, but most of the time it's a bit higher. You see the 12-month trailing yield, or the average yield in the last 12 months, 8.56. Of course, you have YMAX, which is always going to be the highest yield out of all of them. Weekly distributions. The yield will vary, but it's typically in the 40 to 60% range. And this is kind of like, just give me all of what Yield Max has to offer. It's like the Yield Max all in one. And then there's QDVO from Amplify ETFs, which I feel is much better than Devo. Devo is very, very low yield. Another criteria is yield. I'm not going to add something that has 4% yield. You know what I mean? But QDevo, which follows a little bit more NASDAQ stocks, you could see the stocks, typical yield is about 12%. So this is a nice magical range maybe that you could live off of, right? Spend all the income. We know that the magical range is typically the approximate total return of the fund. So if you think QDevo is going to have an average annual return of about 12%, which is what typically the S&P returns, well, you could probably live off of Devo without reinvesting. Your capital will be more or less intact. But now I'm going off on a tangent, something else completely about distribution management. So that's another video. So if we compare these 4 ETFs, of course, all of them have been out for a year. And the winner, believe it or not, and of course this is with dividends reinvested, is YMAX. So YMAX is beating all of these. It's absolutely destroying JEPI as well. You could see the total returns here after 1 year, 25%. It's pretty much in line with QDevo as well. So these are very good. So obviously you see that, you know, technology stocks, or when you're skewing more towards the hot technology stocks, you tend to have a higher total return. But hey, it's only 1 year of data. Let's see if that trend continues. And of course, we're going to be doing this every single month. Moving on to what I like to call the classic S&P 500 cover call ETF. So these are literally S&P 500 with cover calls. Of course, a different strategy. My baseline, my benchmark that I always compare an S&P 500 cover call ETF to, if you want to know its performance, is GPIX. To me, this is the most basic, classic Coke S&P 500 cover call ETF, very, very well managed by Goldman Sachs. Always an approximate 8% yield, very consistent monthly distribution. Of course, you have SPY from NEOS, which falls under the same category, except the yield's always about 12%. This is a community favorite. You also have IVVW, which is personally not my favorite. This is a rinse and repeat strategy. The big pro is the super low management fee, but they do a 1% out of the money call option rinse and repeat strategy. The yield is typically highest on IVVW, of course. Let's see what it is here. Do we have the latest? Yeah, it's about 13%, but it varies greatly, right? The yield, the monthly distribution could vary greatly depending on volatility. And then you have one that from Granite Shares, part of their yield boost series, you have YSPY. So this is, they're doing puts, actually. I keep saying calls, but they're actually doing put options on leveraged S&P 500 ETF. So these are relatively new, but I have to say I've been extremely surprised at the amazing performance. And they have one for the NASDAQ, they have one for Bitcoin, they have a single stock ones as well. So definitely got to keep our eye on this series, guys, because check out these total returns. You see, for YSPY, it hasn't been out for a year, so we don't have the data. But if we look at the 3-month return, it's destroying everybody. If we look at the 1 year, GPIX, of course, is in the top position, right? That's no surprise. SPY is very close, and you have IVVW, that's a trailing third. That's what happens when you do a rinse and repeat passively managed cover call strategy. You typically have much more underperformance than a actively managed cover call strategy. So that's it for the S&P Classic. Now, you might be wondering, well, why don't I just get YSPY? Well, listen, yes, YSPY could be good. The yield is absolutely crazy. Remember that yield is not return. There's weekly distributions, but I don't know how this one is going to do during a volatility or an extended crash. So this is why you got to be a little bit careful with this one. Listen, it could do amazing. I'm not sure, but more time will tell. But definitely a very interesting one to keep our eye on. Moving on to the S&P 500 zero DTE covered call ETF. So all S&P 500 covered call strategies that use a zero DTE strategy, we do have 5. So the list is packed here. You have XDTE, which is typical 25% yield, weekly distribution. SPY-T from Defiance would always tries to target a 20% annual distribution. So if you like a targeted, you feel comfortable with a 20% yield, SPY-T could definitely be one to consider. They do a daily call spread. iSpy from ProShares, right? ProShares has an S&P, NASDAQ, and Russell 2000 zero DTE series. They have the lowest fee out of all the zero DTE. Varying distributions, I would say on the low side. You're looking at, this is the 0DTE one that has the lowest distributions, typically 10, 11, 12, and they change. You have the one from Tap Alpha, T-SPY. They just came out with a NASDAQ version, by the way. This is one of my personal favorites. I mean, I don't invest in the American or the US listed ETFs. I invest in the Canadian ones. But this is definitely one to consider. As we'll see, it has the highest total return out of all of them. It's very nice, very, very consistent 14% yield. So just, 2% more than SPY. Then you have SDTY, which, very, very similar strategy and yield to XDTE from YieldMax. So if we do a total return comparison, T-SPY is the clear winner here. After 1 year, the YieldMax one has not been out for a year, but you see that they're all doing fairly well. But T-SPY here, you could see how close it is to the actual S&P 500. This is the S&P 500 itself, not IVV or VU. IVV or VU will always have a little bit less than the actual S&P 500. So moving on to the NASDAQ. NASDAQ 100, first we have JEPQ. So this one is not exactly the NASDAQ 100, but I included in this category because it's really, really close, much closer than JEPI is to the S&P 500. So similar style and strategy of JEPI, except it's more on the NASDAQ stocks. Dividend yield is going to be a little bit higher than JEPI. So this one's about 9 to 11% yield. Very, very, very big and popular. I mean, JEPI and JEPQ are by far the biggest and most popular ones, right? What are we at in terms of billions? I'm just curious here. 30 billion. Wow, 30 billion. So by far, I mean, JP Morgan has the most popular in terms of AUM, biggest cover call ETFs. But do they perform the best? The answer is actually no, as we'll see in a second. So GPIC is the same thing as GPIX with an X, but on the NASDAQ 100 from Goldman Sachs. This is actually the NASDAQ 100, a very consistent monthly distribution and a very consistent approximate 10% yield. So, about 2% higher than GPIX. You see the nice increasing distributions as well, but you're typically looking between 9 and 11% yield on this one. QQQI from NEOS, similar concept to SPY, except this one is obviously on the NASDAQ, but similar strategy, same fee, same guys doing the calls, they're options experts. And this one, you could always expect a 14.5% yield approximately. You have QQA, which is the Invesco QQQ NASDAQ 100 cover call ETF, the guys who actually manage the Qs. But I think they should stick with indexes because they're underperforming compared to the other NASDAQ 100 cover call ETFs, like we'll see in a second, compared to all of these, I think, actually. And then there's the Granite Shares one, TQQY, which just like their S&P one, they're doing put options on leveraged NASDAQ 100 ETFs. So in terms of performance, all of them have more than 1 year of data except for TQQY. The clear winner is really QQQI and GPIX. They have GPIC rather. They have the highest performance. You can see it's a lot more than JEPQ. That's what happens when you pick stocks instead of just putting the NASDAQ 100. That's why index investing is so popular. But hey, in the 3 months here, you see that as time goes on, of course, we'll have more and more data. Once we have all 3 years and 5 years, we'll have a much more valid indication. Will I do these videos for 5 years? I don't know. I think I'm getting too old for this, like what's his name says in those movies, Lethal Weapon. But TQQY again, look at that outperformance in 3 months. We don't have a year, but we have 3 months. It's really outperforming GPIC and QQQI by a lot. So got to keep an eye. They're doing something right, these Granite Shares guys, this yield boost stuff here. So let's keep an eye on it here. Again, weekly distributions, very impressive. Moving on to the NASDAQ 100 cover call ETFs that use a 0DT strategy. So again, the same providers. You have Roundhill with a nice 42% yield. Wow, that's pretty high. Did they bump it up lately? So it could vary. Yeah, they did bump it up. It's been 23 cents for a long time. Now it's 28. So it's based on volatility. So expect, very high yield, typically 30 to 45 or plus, but it changes every week. QQQT, same concept as SPY-T if you want a 20% target. IQQQ is just like I Spy, so the lowest fee, but on the lower end of the spectrum in terms of yield, and the distributions are not consistent either. You could see that here. They're kind of all over the place. I mean, you got 1 month with $1, then 42 cents and 16 cents. So definitely not consistent. QDTY, which is very similar, which is the yield max one, very similar to QDTE strategy. And now you have the new TDAC from Tap Alpha. So the NASDAQ version of the T-SPY, the first distribution hasn't been declared. Well, my guess it's going to be about 16, maybe even a little bit more. That would be my guess. 16% yield with a very consistent monthly distribution. So if we do the comparison, TDAC's not there yet because there's no performance data. So most of these have been out for a year, and the clear winner still is QDTE. In terms of the 0 DTE, it's doing really well. You see here, performance is pretty good, beating the S&P 500. Well, of course it is. It's the NASDAQ. So yeah, very, very interesting here. Still QDTE, one of the top ones to consider if you like that NASDAQ 0 DTE style. So those are the indexes. My favorite indexes, I think the best ones in the US, right? S&P, NASDAQ, and I also did some diversified US big cap. Now there's a million other covered call ETFs on the US market that you could consider for your portfolio. It's really up to you. I can go through all of them in detail and do the return comparison because it's hard to do it or have a benchmark like the other ones, but it's up to you. Do some research on them. I'm trying to keep you informed of all of them. If you want something more global, as far as I know, GIAX from X Funds is the only one that has really global stocks, global exposures. This actually does 0 DTE, and it's always typically around 24% yield. The distributions are relatively stable, and if you look at the holdings, it's got a bunch of other ETFs in here. Where are the holdings? Here they are. It's got a bunch of Vanguard ETFs and some single stocks and all kinds of other stuff. So there is some global exposure, but as you could see, the top ETFs here, you're looking at mostly the US. But even if you get something like a VT from Vanguard, right, or global, most of it is the US anyway. And you have SVOL, of course, which is still, going strong in terms of AUM. This one, I think they overcomplicated it. They just made it too complicated here. It's been a consistent 30 cents, but it definitely underperforms an S&P 500 cover call ETF, for example, or NASDAQ. Of course, you always have new stuff coming out from YieldMax. I think they just launched the GameStop one. Personally, my favorite one would be the YMAX, right? The all-in-one. But there's a bunch of other ones. There's a Target 12 one. There's a 0 DT ones like we looked. So make sure to keep yourself informed on the YieldMax stuff. There's Curve as well. They have a bunch of single stock cover call ETFs. They have a gold cover call ETF, K Gold, KQQQ for technology. There's Rex Shares, right? Rex Shares has now what I feel is my favorite format, cover calls and 25% leverage, and cover calls on not more than 50% of the portfolio. So it seems like Rex Shares is the first one to come out with these, but they only have it on 4 single stocks for now: Coinbase, Strategy, Tesla, and Nvidia. And they have some cover call ETFs as well, right? FEPI for your classic tech, AIPI for your AI tech, and SEPI for your crypto companies. There's Vista Shares, right? Vista Shares has OMAH. Vista Shares has a series called Target 15, where they're targeting 15% yield. And they have OMAH, which invests in Berkshire and Warren Buffett and Berkshire Hathaway companies like American Express, Coca-Cola. They came out with a new one, just like the sponsor mentioned, right? That follows Bill Ackman's portfolio. You have one on Quality US. So if you like a 15% target, that could be one to consider. There's even this one that I've discovered recently, Nest Yield ETFs, where they're basically the marketing is eggs. So they have 3 ETFs and the yield, it gets higher as you go down. These are definitely more focused on technology. So there's just more and more and more. There's probably so much more. I can't cover all of them. But my opinion, if you're looking at these and do they fit in my portfolio, always ask yourself this question. Well, do they outperform? Do they beat? Are they better than just a classic S&P 500 or NASDAQ 100 cover call ETF solution? Right? It's always something to consider, but make sure you're comfortable with the holdings inside the ETFs, everyone, before you make a decision. Moving on to Bitcoin. All right, last but not least, Bitcoin covered call ETFs. YBTC from Roundhill, weekly distributions, typically pretty high, but they will vary. NEOS has one, BTCI, typically a little bit lower yield. Monthly distributions. You have two from Amplify, Biddy and Baggy. So Biddy basically is targeting a 24% annual yield or 2% amount, 2% per month max. So they're writing less covered calls. They're only writing covered calls to do 2% yield a month. So if you're more bullish, Biddy's definitely one to consider if you're okay with 24% yield. Then they have Baggy where they're writing more covered calls. And you could read here what they're doing in terms of coverage. And again, Granite Shares has one part of their yield boost series as well. If we do a total return comparison, again, the Granite Shares yield boost is outperforming, is beating everyone, but we only have 3 months of data. In terms of year to date, there's only YBTC has been out for a year, but in terms of year to date, YBTC is doing really well. It's still, I would say the clear winner with XBTY to keep a close look on, watch on. Of course, there's Maxi. Maxi's there as well, and this one is just beating all of them because I think you're giving up the least upside. This one I'm seeing some changes in the holdings. I see that IBIT is actually there, and I'm seeing some IBIT calls here as well. So I don't know if they're changing that. The distributions vary. I mean, it's 50 cents, then it's 35 cents. Now it's $1. I guess it'll be $1 per share until the end of the year. So Maxi is definitely one if you like income, not really consistent income, but if you're really, really bullish on Bitcoin because they're not giving up too much upside. Hopefully that strategy doesn't change, but that's basically what it is. So quite a few choices for your Bitcoin covered call ETFs, everyone. By the way, I want to do Maxi versus YBTC. You could see how Maxi beats YBTC, outperforming it by a lot, which makes sense because YBTC is writing covered calls and Maxi is not. Or are they now with that call that I saw? So we'll see what happens. In terms of Bitcoin or crypto companies, you have SEPI from Rex Shares, LFGY from YieldMax, and Blocks from X Funds. So I think in terms of total return, SEPI is the winner right now, but Blocks has only been out for, not even a month or two. So it's up to you. Make sure always do the total return comparisons, right, with the dividend channel where you could compare to ETFs and make your decision. So that's it in terms of the high yield covered call ETF landscape, everyone. Again, I can't cover everything. There's too much to cover. But I just want to focus more on the quality ones. If you're American, don't forget that yes, I do have a lot of Canadian content or Canadian stock market content, but don't forget that I have a specific playlist just for US content. So if you're American, you only want to watch that, click on the name of my channel, click on the hyperlink, click on playlists, and you see one of the playlists is called US market only content. So if you view full playlist here, you'll see the videos only for designed or specifically for American high yield cover call investors. For example, I got all kinds here in terms of Bitcoin, MSTR cover call ETFs, which I omitted this month from the series, but there's a bunch of MSTR cover call ETFs, right? There's one from YieldMax, one from Rex Shares, one from Bitwise. So this video compares all of them. And I have stuff on SVOL and I have all kinds of stuff here. So anything related to the US market, make sure to check out this playlist and save this playlist to your favorites if you're American, all right? So check out the links or the affiliate links in the video description below. That's where you'll find the link to our website, social media, for coaching sessions, digital products. Everything is there. We're going to do this again next month. So thanks for watching, everyone. See you next time.